If Bitcoin and cryptocurrencies are being seen as a revolutionary implementation of blockchain, then we have not even started off on decentralized finance or DeFi and the possibility that it unlocks for us. Well, essentially, DeFi uses the blockchain technology and supports several kinds of financial transactions. And this is giving rise to a new burst of innovation and one that is moving at light speed. So to help us understand how we should be looking at DeFi and how consumers can benefit from it, we have Joel John, the principal at LedgerPrime, joining us. LedgerPrime is a quantitative digital asset investment firm, and we learn more about that. Thanks for joining us, Joel.
Hey, thanks for having me on.
And please welcome back Nischal Shetty, the founder and CEO of WazirX, India's leading cryptocurrency exchange. Nischal, good to have you back with us here on Business Insider.
Yeah, sure. Thanks a lot for inviting me here.
Now, any new technology is often accused of being a fad, right? In the sense that crypto was seen as a fad, but now much greater acceptance. You had NFTs, which were seen as a fad, but now people are taking it more seriously. And as with any kind of new technology, first they accuse you of being too fast, then they accuse you of not being fast enough. So how is the financial community looking at DeFi? Joel?
Sure. I think there's two sides to that question, right? Is it just DeFi, and how's the financial community looking at NFTs, right? So if you take DeFi as a subsection, hedge funds, institutional organizations, venture funds, all of them see massive opportunity. I think a large part of the conversation there is linked with how yields are performing on a global basis. DeFi ventures typically tend to have higher interest rates offered, which tends to attract a lot of risk-on capital. So, regardless of whether an investor is looking to invest in a venture or just create interest rate, there is more in terms of returns, and that attracts investors. But a second side of that is also attracting users. If you take a look at the recent Chainalysis report, users from emerging markets like Philippines, India, and even Africa for that matter, are flocking to DeFi as an alternative banking ecosystem, which does seem to be more inclusive and accessible. And that in turn means there's a large user base that's being served right now. Part of what Nischal is working on with WazirX in their P2P fashion is also plugging into DeFi, right? Like I could argue. So that's that. But I think with NFTs, I would say that the institutional market was in a little bit of a shock because nobody was expecting it to grow so fast, so soon. So I think there was Coin Fund that was, which is a firm based out of the stateside, which was quite proactively pro NFT 2 years back. But there were very few other firms that were saying, NFTs are going to be big. So when you saw, hundreds of millions of dollars flowing into NFTs, all of a sudden hedge funds and VCs had to really reconsider what's really going on. So some folks were buying NFTs at the spot market, just making a portfolio of NFTs. Some folks had investments in marketplaces. But I think with India and again with emerging markets, the strategy is not that yet well defined just yet because consumer behavior in this side of the world is very different. So we're still figuring out what would really stick. And maybe we can go into that later on in the conversation.
Not being well-defined seems to be like the functional word out here. Nischal, you're at the helm of a lot of these new technologies. Initially you were the new kids on the block. You're no more new kids on the block. You're the legacy guys in the business right now. What's it like up in that altitude?
Yeah, we've been in crypto only 4 years. You're calling us legacy.
Too old.
But I think that's the pace of crypto. By the time you learn something new and you think that, now I'm ahead of the curve, there's a new technology. I mean, NFTs, for example, came out of nowhere. So, I think if you think about, the last time there was an innovation which was sort of permissionless and borderless, that's the internet, and we see what it has done. Yeah. And initially people thought internet was just static pages, and then suddenly you saw internet could be social networks, it could be e-commerce, it could be anything. And I think that's the transition that crypto is going through right now. Initially people thought crypto was just currency, and then it became an asset, and then there was trading, and now suddenly there are these NFTs, and now there's DeFi. I think what we're seeing is just the expansion and the opening up of this technology. And I don't think anyone of us can comprehend what other directions this could take. But my belief is every few years, we'll see a new offshoot of crypto, which will touch a new demographic. NFT, for example, it's touching this whole new demographic of influencers and creators and people who don't necessarily want to trade. It's not like you're always into NFT because you're a trader. Before, the thing was only if you're a trader, you're getting into crypto. And now it's like if you're an enthusiast, if you're a creative, you can get into crypto. And I believe we'll see many more such innovation which will touch different parts of society in crypto. Having said that, I think the thing that excites me about DeFi is the fact that if you see the disparity in financial services today based on where you live. For example, in India, we don't have access to the kind of capital at the kind of rates that you get in, let's say, the US or some other developed nation. And why is that disparity? We don't have disparity of information today. We can be anywhere in the world and we get the same information. But then why do we live with the disparity of financial services? And I think that's where DeFi is going to really change the game. It's going to say that doesn't matter whether you're in a developing nation, an underdeveloped, developed, doesn't matter where you are, you get access to the same financial services. And I think that's happening. For example, today, if you want to get access to a financial service, you need to have a background. Now, one of the biggest problems that the youth face is I'm new to this entire ecosystem. I'm new to the world of finance. How do I even have a background? And I've had that issue as well. When I was starting out, it's impossible to get a loan because you don't have a history. And now in DeFi, what happens, it doesn't matter whether you have 20 years of history or zero, you can get a DeFi loan. Of course, the thing is you need to have some collateral. And I think we are in that initial phase. But eventually, I'm sure we'll figure out how do you get maybe loans on DeFi without collateral, or maybe double the collateral that you keep. Today, it's not possible. But I think we are going towards that world. But at least today, you can put your Bitcoin and get a stable coin in return. That again, in the real world, it's again not always possible. So I think how I see DeFi is just opening up the whole financial world to anyone. The current financial world, the traditional one, it's not for anyone. It's only for specific set of people who conform to specific set of rules laid out by financial institutions. And I think that is changing. And it's like, you were playing maybe Ranji Trophy, and now you get to play on the international scene. That's the feeling I get when I look at DeFi.
And I think it's rightly put, right? And the next thing I wanted to really chat with you, gentlemen, about is really the potential of disruption. And you've largely outlined what is the kind of disruption that you see or what you already see is happening. Joel, I want you to come in on that. What is the kind of disruption that particularly excites you when it comes to the DeFi space?
So I think, there's really three kinds of disruptions that you're seeing. One is demographic driven. So that is, it plugs into what Nischal was saying. As somebody that's 20, living in a small town in India, can literally work with somebody in Canada, just staying home today. And they can not only find jobs, they can also find the means to own what they work on. So it's a whole, future of work thesis that's taking off with new financial rails. And I feel DeFi is now enabling that. So historically, you had to move abroad, you had to get equity rights, and that's how you used to find the means to own part of a business abroad. Now, basically, young folks just work with protocols, they get tokens, and they have the rights to sell it whenever they wish. So I feel like it becomes the rails for creation of opportunity and ownership. The second that I'm seeing is the disruption of existing financial services, right? So my biggest bet is that within the next 10 years, you will have the equivalent of a TransferWise being built off stable coins. And historically, it used to be hard because Ethereum fees was relatively high. The other day, I happened to use stablecoins on Solana, and I was like, wow, this feels like magic, because the speeds were somewhat similar to Google Pay, and the fees were also negligible. Now, there's a whole lot of arguments around decentralization and all of that. But that aside, the user experience did feel like, the future is here now. So remittance is likely going to be the base layer of services. Once that is done, you will likely have, second order services like Forex, lending, what have you. I think the third that's likely going to happen is institutions themselves are changing, right? Like, I think the big thing within crypto right now is we see as an institution is being disrupted, which I do agree. I've seen how it is evolved just within the last few years. But I think it's not just going to be venture capital that's being disrupted. It's going to be your banks. It's going to be your large social networks. It's going to be even how we talk about communities in the context of Web3 has some parallel to cults and religions, which may be stretching it, but even how we socialize is really changing. So I feel change is happening at three levels, right? One is at the individual level. The second is in terms of institutions, and third is in terms of how communities are evolving. And at the crux of all of it is that you have this parallel infrastructure layer that's allowing people to move value without permission from the regulator. But I think quick caveat there: permissionless does not mean compliance-less. So a lot of the stuff that you do on chain can actually be regulated far better than in the conventional fiat world, so long as you have developed the infrastructure to do that. So
that's literally what I wanted to chat with you about. Do you at any level, and how does the concept of regulation really play on both your minds, in the sense that you see that there's going to be regulation? That regulation is good, of course, it's good for authenticity, but it's questionable what regulation can do for your pace of innovation. What are your thoughts around here, Nischal?
Look, regulation will happen in phases, and right now we're at the stage where even the centralized services that are sort of the bridge between the centralized world and the decentralized world, like exchanges, wallets, even those are not regulated. And all of the regulation talk that is happening right now is still focused on these intermediaries, you can say. There are still intermediaries who like exchanges. And I think that's where the first wave of regulation is going to hit, where you're going to see these intermediaries getting regulated. And it's easier because you have a company, you have a product, and people that you can go after. The second maybe wave of regulation, where the crypto regulations become more mature, is when I think the DeFi ecosystem will probably start seeing some sort of regulatory frameworks being put. The only thing is, because DeFi is not location specific, like decentralized in general, it's not specific to a location. The question is, will one country be able to do this? I don't think so. I think what will happen is maybe there has to be a global regulation, which will probably set some guidelines, and you cannot again enforce these things. So what will happen is probably, you have to motivate people in the whole DeFi ecosystem to migrate towards these protocols that might be more compliant than the others that are less compliant. You cannot stop or enforce or change anything, but what you can do is you can make sure that this enables better services. And maybe that is where, the kind of loans that you can get on DeFi, maybe it'll have lower rates of interest when some regulation comes in, and there are protocols that adhere to some standards that the world agrees with, the global, let's say IMF, or some new force agrees. Maybe there's certain level of trust that builds up. So, but the thing is, this is going to be very different. Like the decentralized regulation that we think about, dream about, it's not going to be where a country says, I want to enforce this, and that will happen. Because let's take the example. Let's say 3 countries decide we want to enforce regulation on DeFi. Developers and creators are just going to move to another country. So till the time you do not have every country having the same kind of regulation, I think DeFi is going to be harder. But it's going to be interesting to see how centralized regulations come in. And I think that is the first step. There should be regulation on centralized services that offer crypto. And maybe then we can go to this. Also, the other thing is, it's good not to see any regulation early on in DeFi, because it's still evolving. And I keep wondering, if, let's say, we had regulation a year ago, I don't know what would have happened to the space of NFTs. Because if you see the draft bill of India also, there is not a mention of NFT, because they never thought of that. And it's all about fungible tokens. And suddenly now you have a non-fungible token, which just reverses the whole thing. So I think regulations slower on DeFi is probably better, because there is going to be a lot more services that we've never even imagined would be possible. Because right now what DeFi is doing is just replicating existing traditional services. So in innovation, what happens is, like, the first step is always to replicate what exists and do it better, and then you innovate. So that innovation phase, I think I'm really excited, because that's going to happen in the next few years, where unthought of services in finance are going to be possible in DeFi. it's going to be very interesting. And I hope regulations don't come before that, because it will just destroy that innovation.
Well, hopefully that would be the way it would work. Joel?
I think, I completely agree with Nischal in the sense that the regulator needs to step in at the right time. But I would also, I can't say it with a plain face that the markets are not abused, in the sense that if I take, it's classic with any technical innovation, is what happens is people tend to overpromise what the technology can do in the early stages. There's a lot of retail inbound capital, but no ways to really be washed out for. So when I look at some of the things in NFTs and DeFi's and even the token markets, I do wonder if the market would have done better with some form of government guidance. I also do wonder that if government guidance would have onboarded a lot more technical talent and traditional players into the ecosystem, and maybe development would have gone in a completely different direction, right? So that's the parallel thought I had when Nischal was mentioning what he did. Although I completely agree with the vast majority of what he did, what he said. I think the one thing that regulators are missing out on a global level is that the amount of financial data that you can actually get from on-chain transactions is far more richer than what you could possibly get in a traditional economy. So the reason why I say that is because I'm a DeFi user myself, and I've seen how some of these platforms work. You just send in your wallet address, and it literally calculates your entire P&L statement and tells you this is how much you owe in taxes, which it really pulls all of that data from on-chain transactions that can be publicly verified. So from a regulator's point of view, I'd be like, isn't this like magic, right? It's your dream in the sense that you can see everything I do. Why don't you just say, okay, this is your tax bill, just pay it and you're done with for the day. I think the software layer for regulation will likely play a crucial role in creating a global standard. Like Nischal said, I think the FATF is already working on something along those lines. So it's a function of two things in my view. One is you need the political will, that is, the government needs to make it a mandate that this is something we want to enable, that crypto can make India a multi-trillion-dollar economy. Let's do it. We are already a multi-trillion-dollar economy. To hit the $20 trillion mark, we'll likely need to do that. The second bit is, it plugs in with what Nischal said early on, is that the lack of regulation in India is likely pushing people abroad. And that is likely not going to play well for the market on the long run, because it really boils down to being an incentive game, right? Like I think one of the things we keep talking about is brain drain, but we've been talking about wave crypto regulations in India for about 7-8 years now. So that's almost a decade. For a sense of scale, the moon landing actually took shorter amount from the first speech till the moon landing itself happening, right? Like I'm not complaining. I get the sophistication and complexity, like Nischal said, there's so much that's moving fast, but maybe it's also a function of how we regulate frontier technologies like drones, AI, especially crypto, because it's a financial product at the end of the day. Yeah.
Do you want to quickly come in and posit us, what's the percentage of the financial system that you hope will be running on, blockchain and DeFi systems? Just a number out there.
I'm going to take this, Nischal. I think it's going to be about 70 to 80% in my point of view. It's likely not going to be entirely on what we consider public permissionless chains. It's likely going to have some very boring enterprise blockchains involved. Like, everything that we have as consensus within the crypto ecosystem may likely be wrong 10 years on. But it's a lot like finance, right? Fintech, right? 10 years back, nobody thought that we would have UPI and debit cards taking off in such a drastic fashion, right? 2009, 2010, I remember people used to use Flipkart because they had cash on delivery. Nobody used to trust a debit card. And now when I go back to my small hometown in Kerala, people are using Meesho and what have you, right? So all of that fintech layer has gone online. And 10 years from now, I see the same thing happening with crypto, partly because we have such a young demographic. A major part of what would be required to enable that, at least in the India context, is how the India stack and blockchains come hand in hand. There is definitely a thin intersection where the government can actually have what it wants in terms of transparency, data, control, and you can still have the upsides of having a public chain. But that's for the government to figure out, I would think. But there is also the flip side that younger folks would likely work entirely on permissionless global scale chains because you have vastly better opportunities working there. So yeah, the number is likely 80% in my point of view by 2030.
Lovely. Nischal, is there a number that you concur with? What do you envision?
For 10 years, I think it's 100%. I don't think there'll be a business in finance which would not have any involvement with crypto. It's a lot like websites. Today you have a business, you have a website, whether you actively use that or not, but you have a representation. Because it's just going to be so cool for everyone to say at least that they're involved. And I think adoption will happen in different ways. For example, we hear about CBDCs. And my guess is that most nations will expedite and launch their own central bank digital currencies to stay relevant. Right now, it's to stay innovative, but in another 5 years, it'll be just to stay relevant and make your currency still in use online. And if that happens, then every institution in that country has to get into crypto. So I think the fastest way for all the fintechs in a nation to get in would be when CBDC launches. And I think that'll happen before 10 years. So it's not even every business will have to on their own think that they have to get into crypto, but I think they'll be forced to get into crypto. The moment their central bank says we are now going to launch our CBDC, you'll have to get ready for it, which means every bank, every financial institution will have to have a wallet which will support that. And that is how I believe they will get into this, and your country will be 100% transformed to support and work in crypto. I think 10 years, like I said, I think the technology either it has to win or it has to die. One of the two things.
I like those numbers, 80% and 100%. Just a quick thing I wanted to comment on this. Security is always a concern, right? And we keep hearing of incidents about how the hackers are now having a field day on DeFi blockchains. How big is this threat, or is this just one-off incidents that will get plugged and taken care of as the technology evolves?
Look, I think security now again that's from different aspects. One is the ownership risk, which is when you're in crypto and you're dealing with your own crypto. How dangerous is that? Can that be hacked, or can you lose it? And that is as dangerous as running any of your social media accounts where it can get compromised. And the only difference in that is you lose data. Out here, you lose value. So the first education is on ownership and holding on how to secure your crypto assets. And that comes from the people. And no amount of security can always 100% assure that you can keep it safe unless you are educated and you know how to keep it safe. It's like your wallet. Someone can, flick it from you someday when you're walking on the street also, even if you're super careful. So you need to make sure that products have to build system, like you have 2 factors, you have three-step withdrawal processes and exchanges, which make sure that, but despite that, we do see people falling victims to some online scam, or stuff like that. The second is all of this in DeFi, what you hear often is more to do with the state of this ecosystem being new. So a lot of mistakes are being done by developers and the teams that are building these projects. Like recently, there was some bug that led to, I think, $70 million being drained. And that happens because the ecosystem is new. And you can't even blame the teams, because what is happening is they're also building, the tools that are needed don't exist for a developer to even build and go live. It's that early. It's like, if you saw the static web pages of the early days, there were still errors in the HTML tags because they had to hand code it. Versus today, where you want to create a web page, a machine would create the boilerplate code for that, and it will never be wrong because it already is defined. And that's where we are right now, where a lot of small mistakes can happen, will happen, and that leads to large exploits. As the ecosystem grows, what will happen is you'll have these developer tools being built out, which will make sure that all of those 80-90% of the mistakes that usually most developers will make, that will never happen. And after that, then it's more about, how even a bank can get hacked someday, despite all of the things they follow. Then it'll be only sophisticated hacks you'll hear of. But this will never go away. See, whenever you build technology, there will always be ways to break them. It's just so much more harder. That's all. There is no system which can ever say they are 100% secure, because someone motivated enough and with the right resources will be able to get into that. The thing is, how do you reduce it? How do you minimize? For example, before you heard of exchanges getting hacked and losing all of the assets they had, then the exchanges became more secure and more smarter. But they also made sure that even if they get hacked, they're ready for that, in the sense that you're ready to lose all of the assets that are online. And that's what is called the hot wallet, which is probably a small percentage of your real assets. So you still be ready for 0 day, where people still get access to your systems, and you don't lose the entire amount. You just lose enough that you're okay to let go. Okay. It's like that ATM machine of a bank getting hacked. Someone looting an ATM machine doesn't mean the bank will go down. All of us know that today. So that's how you separate things out. You just make things more secure. And I think we are going towards that slowly and steady. It'll take a few more years before all of these things will be where you won't hear about common exploits or regular things. But the sophisticated ones, I think they'll still exist.
Indeed. Joel?
So I think two things, right? Like in addition to what Nischal had to say, I think DeFi hacks are vastly overhyped, and there's a lot of hyperbole around it. So if I just take a stablecoin transfers in this last year, on a given week, at least $500 billion in volume is moving across DeFi rails. Projects like Aave and Compound, which are lending platforms, they have at least $30 billion under them. So, larger than some of your largest banks in India. What usually happens is when there is a new venture that's launching, there is likely a large hack that happens. But as a percentage of all capital that's there within DeFi, it's actually very minuscule. And I think the reason why a lot of people are intrigued is because obviously a lot of people are paying attention to the space, and anything that creates alarm tends to go viral. So, and there is also a lot of drama, right? Like with hackers breaking in, then returning the funds. There's a whole lot of hostage negotiation process. So it looks a little entertaining from the outside, I would presume. And that's part of the reason, right? So that's the hyperbole angle. The other thing that I'm seeing is there are no, that's what's called security audits. So it's basically service providers who check your code to basically see if there are bugs, right? And what a lot of new founding teams struggle with is they either struggle to pay a security auditor that can cost anywhere between $20,000 to $150,000, which is almost a seed stage race in India. And there is also a backlog of about 3 to 4 months if you need a good security auditor to work with you. So I feel as more people get, technically adapt to what Web3 needs, the number of firms offering security audits will increase, and that should mostly bring down, number of these incidents. What I would also flag is that we're far from a point where you can no longer say retail users should not commit capital to DeFi. There are certain projects like Uniswap or Curve, which have handled maybe trillions of dollars in trade volume and have not had an incident yet. So long as users are aware of the risk and taking care of their private keys, all of that, it's fine to start using DeFi at this point in time. Maybe I would have had a different opinion a year back. What is also lacking, I think the third point is, again, it plugs to what Nischal said about exchanges, is the insurance ecosystem around DeFi hacks is not well developed yet. But given the number of institutional customers, right, like hedge funds and using DeFi today, I feel like that servicing sector should also rapidly evolve very soon.
Lovely. Nearly the end of our allotted time with both you gentlemen. And it's been a fascinating discussion, really. DeFi is one new topic on the block, and there are more questions than answers. And this is slowly helping us understand the real potential that exists. And with both your estimations that between 80 to 100% of, DeFi just getting into the market out in the next 10 years, I believe that we are now seeing the birth of something that is radically different, and one that will need more of your time for everybody to understand just how they should be thinking about these. On that note, Joel, Nischal, gentlemen, it's been a delight to have you here with us on Business Insider. And we look forward to having you back more often to help us understand better how we should be thinking about this. And of course, the possibilities that exist out here for all our benefit. Thanks again.
Thanks,
Thank you.
Ashwin.